Hello and welcome to Money Minutes. India will go for polls in April-May this year to elect its 16th Lok Sabha, the lower house of the parliament, where a majority is needed to run the government. It is said that politics and markets go hand in hand, and today we will discuss that how it will affect India post-May elections. And with us we have Rajesh Kumar today. Rajesh, why do you think it's very important to have a very stable and strong government post the May elections?
Saurabh, it's extremely important that we have a stable and a strong government in center after the elections, because the Indian economy is not doing very well, or it's not doing the way people would have expected it to do. So the investor confidence is at a very low level. We have a situation where economic growth has slipped to 4.5%, as the revised numbers says. We have a very high level of inflation. The reform process is almost stuck. So therefore we need a very strong government, a stable government at least, which can take decisions so that the economy can move forward, the investor confidence can be revived, so that growth is once again restored in the economy. And of course markets will react to the economy as it progresses.
So what have been the key takeaways from history as we have seen over the electoral process over the years?
Okay, but the important thing to understand is, and which is a takeaway from history, recent history, is that instability doesn't last for very long. If you have instability, the voters vote for stability after that. We saw that in early 90s, we saw that in 96 to 98. So that's one key takeaway. So even if we don't get a stable government in 2014, after May 2014, that will not be the end of the road, and as many people are saying. Second is that investors should differentiate between the immediate short run and the long run. If you look at since 1991 till date, the markets have come a long way, and economy has also progressed quite a bit. Other thing to understand and underline is that large coalitions are not necessarily a bad thing for the economy. In fact, you had a coalition government in 96 to 98 under United Front leadership, which did fairly well on the economic front despite a lot of compulsions on the domestic side as well as international pressures. So large coalitions are not necessarily bad as normally perceived.
Post-election, what could be the best and the worst case scenarios for the markets?
Best scenario, of course, would be that we get a strong and stable government at the center which has majority in the House and which is able to push decisions and be able to revive investor confidence. The worst outcome would be that none of the formations, be it the UPA or the NDA, has the numbers to form the government, and it takes far too long to bring in partners and all those things happening. That will be a setback for investors, because if it takes too long, that will be so much of uncertainty uncertainty will come into the system. The worst outcome, of course, would be that none of them is able to form a government, which means a re-election. Then we are practically writing a year off. That will do tremendous damage to the market and investor confidence.
What should investors do?
Well, the markets are expecting that we'll get a stable government. So the experts are saying that people should remain invested, but it will not harm investors if they maintain some amount of cash balance. In case there is some volatility after the elections, they can take advantage of it. In case we get a stable government, they can deploy that cash as people start to understand what the programs and priorities of the next government are.
Thank you, Rajesh, for sharing your views. As it seems now that investors will have to wait and watch till the elections to get a clarity on how the markets will fare in the near and the long term. Thanks for watching Money Minutes. Stay tuned for more.